Okay, so let me give you a breakdown on essentially the ways that you could have monetized this trade and why I essentially prefer trading crash and boom overall compared to any other pair. Okay, so reason being, firstly, markets open 24/7, 7 days a week. When the market goes against your favor, drawdowns are essentially slower, and profits are bigger, if that makes sense. So, in layman's terms, what that would mean, each of these candles represents 1 minute. So, let's say it took 20 minutes to go up, but it took 1 minute to come right back down and put you in break even. So, let's say, for example, for every 20 minutes the market moves up, it will take like 20 minutes to come back to that point. So, if you are in profit, instead of it coming back to you enter immediately, it will take a very long time. Okay, so let's have a look, right? Let's just go ahead over here and go to let's load up. Okay, cool. Make it looks a bit clean. Cool. So this is the period separator that shows what happened from 2 a.m. SA time. I think it's USA. That would be about, I don't know what's the time, but anyway. Um, let's say it gave you a sell there. It gave you a sell, yeah. Cool. Start with today. Those are the entry markers. So let's just go with a mere lot size of 3. Okay, the market wants us to use a 13. So we're going to use a 13. So we put the sell limit here. Let's modify that. So another trick, just to make it easy, I'll just choose any value like 4248 as, let's say, my take profit 4248 and SL 4292. Now that's just random values, right? Cool. So gives me a SL, yeah. Okay, cool. So if you used a 13 lot size, right? Essentially on this trade, it gave you a sell, then it went all the way up. Then it gave you another sell. So it went all the way up till there it was $160. So for example, what that would mean is that it took a total of let's just go back. Trying to count the candlesticks. So it's 1, 2, 3. Let's go to the 5 minute actually. 5, 10, 15, 20, 25, 30, 35, 40 minutes. So it took a total of 40 minutes, right, to put you in a drawdown of $160 on a 13 lot size. You could have taken that trade on a $200 account, $300 account using that. Okay, let's say not a $250 account. There would be full margin, but you'd have been in. So after 40 minutes of being in a big minus of $160, you'd have went straight into a break-even opportunity or like a small profit. Yeah, it went back up. So essentially, I'm too lazy to do it though, but the way we leverage it, I would have leveraged the position here and we would have another position here. So overall, after that 40 minutes and it spiked down, we would have already had a profit opportunity. But let's say if you didn't, right, and you risked it all on the first entry, you couldn't, on your $300 account, you use the 13 lot size, which you can on Crash 500. On your real account, you are able to leverage that lot size. 40 minutes, you had a drawdown, and then you had a break even opportunity. Then you went back into a drawdown, bit of a lesser one, and then you went into a smaller profit opportunity. So even so this smaller profit opportunity here would be, let's say you had a $200 account, that would be about $47. So even though you went into minus $160, you could have closed on $47, which is essentially 1,000 rand. It's not bad. Um, and call it a day. That's like you just go to one spike. Cool. If you held it, that's like $138 in a very short period of time, and that's your trade for the day. Cool. Let's say whatever happened here, you did, even so it gave you a signal, you didn't get in, cool. Wait for the market to play out, and then over here it gave you this one, right? So now let's say, for example, you went in again with your 13 lot size. Remember, the other one was a bad one where you went into a big $160 drawdown before you got like a $47 profit, but it was still a profit opportunity, and you would still have an opportunity to close in profit or lesser loss. So here you had a drawdown of, what's this? Oh, that's the sell limit. Let's just do that. So let's say it played out. You said it was your last trade. Now you're getting in again. Cool. Um, you had a drawdown of $35 on a 13 lot size on your, that was 350 or $250 account, which is now maybe $300 account. You had a drawdown of $35. You go into profit immediately. After like 2 minutes to a $72, which is not a bad growth. Let's say, okay, you're going to keep it a bit. You held it. You made $289 with a $35 drawdown. You now just doubled your $250 account. Even though you were almost margin called and kicked out, you would have been saved just. But that's a 13 lot size, obviously. You wouldn't necessarily want to do that unless you obviously have enough money. But I'm just saying the potential. If this was the case, you would have actually pulled through on there. Even though it gave you a sell here, it gave you a sell here, and if you closed after every single one, this is the one that would have got you, alright? But let's say you added one here, you added one here, you added another sell, and you added another sell. Even if the market came till here, you had a profit opportunity, or even still here, I think it would have been a lesser loss opportunity, and overall you would have still been able to close in profit. That's just the different ways that you could essentially leverage a pair or trading crash and boom with a spike. $35 drawdown using a 13 lot size to make $289 is definitely not bad. And as you can see, before we got to this one, we did exactly the same thing that we did over here. With this one, we just had a drawdown. But let's say this was, you had a look at the market, you didn't get this one, and you got this one. You say, oh, okay, it gave one here, it didn't spike. I'm gonna get in on this one. Then essentially, uh, you even have another decent trade, $63 drawdown. And then you went into a, let's just say about a $103. It's not bad. And if you look at the time frame, it's 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. It's like 15 to 20 minutes to make $100. You could be done. Like you could take one trade a day. Now instead of using a 13, you're using 130 lot size in that same essentially time. And it's consistent. There's always going to be spikes because the way crash and bull runs, it's either crashes or it's going to spike, and the market has to either go up or down at some point. So just need to get good at essentially identifying when it's a good time for you to get in, and the most important thing is to actually know when to cut your losses, which is the hard thing. But anyway, let's say that was the trade. You went into profit, and now after you went into profit, you didn't close, you went all the way back up to entry, and then you closed here, maybe because now you got scared, it came back. But if you maybe held it a bit longer and you were risky, or you cut positions and you just held a bit more. Overall trade would have been about a $217 trade with a $63 drawdown. And yeah, you could obviously still accommodate with that stop loss, still giving it that room. But sometimes when it comes to that point, you will probably move your stop loss away and stuff like that. But overall, as you can see, is one to say you sold at a profit opportunity, a profit opportunity. Yeah. So on that specific pair for today, if that was the pair that you chose to trade and you chose to follow a certain structure and you were using a 13 lot size, you could have easily closed on a decent $500 with a mere investment of like $250, which is not bad. And it would have been all within like maybe a time frame of about 2 to 4 hours. I think that's a decent time frame. And you're probably taking trades only within this like a 2 hour time frame because you're probably waiting, monitoring, whatever the case may be. But anyway, that is just a one of many. Anyway, peace in the Middle East.